The evolution and future of banking. The global banking system is vast and often hard to grasp. With over 30,000 banks worldwide, the top 10 alone manage assets worth $25 trillion. While today's banking appears complex, it began with a simple goal: to make trade and finance easier. In 11th century Italy, merchants struggled with a variety of currencies. In Pisa, for example, they dealt with 7 different types of coins. To simplify trade, money changers began exchanging currencies on benches, or bancos, the origin of the word bank. As trade grew, so did financial innovation. Brokers started offering loans, while merchants in Geneva developed early forms of cashless payment. Soon, banks were providing credit not just to businesses, but also to churches and even kings. How banks work today. At their core, banks manage risk. They collect deposits from savers, offer small interest, and lend that money at higher rates to individuals and businesses. This fuels consumer spending and business growth, turning idle money into active capital. Banks also earn revenue through savings deposits, credit cards, currency trading, custodial services, and cash management. However, modern banks often chase short-term profits over long-term value. Before the 2008 crisis, many banks engaged in risky investments and issued loans to unqualified buyers, actions that ultimately triggered a global financial meltdown. Stocks crashed, jobs were lost, and trust in the system collapsed. Governments spent billions bailing out failing banks and passed regulations to prevent future disasters, some of which were weakened by lobbying. Alternatives to traditional banking. New financial models are gaining popularity. Fee-only investment banks avoid commission-based sales, aligning better with client interests. Credit unions, owned and controlled by members, emphasize shared value over profit. They support communities and weather the 2008 crisis better than big banks. Crowdfunding platforms let individuals pool small investments to fund creative or business projects, reducing reliance on banks. Microcredits, small loans in developing countries, help people start businesses and escape poverty. Once ignored, this sector is now a multi-billion-dollar industry. While traditional banking remains essential for economic growth, its future lies in transparency, innovation, and community-centered models. Who provides financial services, and how, is something we can shape together.